Well, US stocks have tumbled. The Nasdaq 100, the biggest loser overnight, down 2.4%, wiping out gains led by Nvidia, which fell about 3%. Now, importantly, the Nasdaq 100 is almost in a correction. It's now down 8%. The Aussie market today looks like it'll fall close to a correction too. Bitcoin, meanwhile, has continued to plummet further into bear market territory. Overnight, it lost about 4%. It's now $87,177 US. Importantly, it's lost 7 months of gains in about 50 days. It's down 30% from its record all-time high. Today, we cover the stock market crash toolkit and stocks that you need to watch. My name is Jessica Amir. It's good to have your company. And thank you for joining us on Friday, the 21st of November. So it feels like we're getting signals that February could be hitting markets all over again. That was when we saw the market crumble 24%. Now, I want to touch on why this could be the case. The fact is we are seeing the indices, Nvidia, the king cryptocurrency, Bitcoin, all close at their lows of the day. This basically suggests selling pressure is mounting. More dark days are probably ahead for those riskier assets before we can even think about a potential rebound. Now, if the trend is our friend, we need to believe that. We need to trust markets and trust prices, what they're saying. Look at the facts. That's what I look at. And we need to believe that if we are hitting these lower levels across the coming days and weeks, this suggests that the pullback is not over. So we need to see, again, reiterating that point, what happens over the coming days and weeks. So today's focus is on the crash toolkit. Firstly, a bit of a sanity check. And this one reflects on some ideas from the Stoics, such as Marcus Aurelius. Firstly, we need to remember that we need to be kind to ourselves. Consider what is happening in markets is what always happens. We get worried markets will crash, and then we wonder if markets have bottomed or if we'll see a full-blown market crash. And then we second-guess ourselves if we bought or sold at the right time. And what if you got it wrong? But I want us to, all remember that everyone is different, no matter who you're sitting next to today, on the train, at work, or whether you're an investor or a trader. We all need to slow down, watch the price action for the coming days and the weeks before anyone knows if a potential bottom is in or if we'll get the Santa rally at all. Then just think about focusing those core themes that you truly believe will drive the best returns for the next decade. And critically, I believe this is probably going to be AI, chips, data centers, uranium to power all of that, and lithium needed to build the chips in the data centers. These will be the core themes driving probably the best returns for the next decade. So maybe if you believe that's the case as well, maybe you also take a view on this over the next 5, 10, or 20 years. And with that in mind, that allows you to focus at a slower pace and with a calm pace, focus on buying these stocks that you want to hold if the market crashes. Let's say Nvidia, Constellation Energy, Albemarle, Pilbara Minerals of this world. So focus on critically what you think matters and focus on your own strategy. As for why I believe markets could fall into a correction, some on Wall Street are saying, hey, markets may even drop 10% from here before they rally up again. So why is that? So let's go through that toolkit. So first of all, let's look at the VIX. So the VIX, when that rises, markets fall. And fear has risen back to tariff levels that we saw a little while ago before markets then crashed. And the Nasdaq 100 fell about 24%. So when fear rises, as I'm saying, stocks fall. So until we see VIX, which you can track on Moomoo just by typing in VIX, until you see this index fall, then you cannot expect markets to rally. So why are markets under pressure? Why is VIX rising? Well, obviously, it's what I pointed out a couple of weeks ago. It's the fact that the market is adjusting for the fact that no US interest rates are coming. Why? Well, the US government is now releasing data after the historic shutdown. Jobs data, home sales out overnight basically suggests the US economy, hey, it's A-OK. There's no need to cut interest rates in December. anymore. The market now sees just a 35% chance of a rate cut in December. Remember, rewind back to a month ago, I was talking about the chances of a rate cut being 70% in December. So now the market has to adjust for that, basically erasing forward valuations, taking out the probability of a rate cut. That's what markets are adjusting for, right? Now, this could continue for a little longer. Each time we do get more data out of the US saying, hey, the economy is strong, then rate cut bets need to be adjusted and investment banks need to adjust their books. That's why we are saying we could be grinding lower. So the question is, what do you do now if you are wanting returns? Well, we need to look at where momentum is, as in what's going up, and what's doing well. There's always a bull market somewhere. I say that a lot. So the fact is, overnight, if we have a look at healthcare stocks like Regeneron, that hit new highs overnight. It's now at 52% from its lows. US healthcare ETFs such as the IYH, that holds near some of its highest levels since the August 2024 crash. Now, this is telling, healthcare is telling us it usually does well when markets crash. Of course, we know that. Healthcare usually does well when markets brace for slower economic growth or no rate cuts. Remember, healthcare usually holds its own regardless of what on earth is happening in the economy or the stock market. Now, let's go back to that point, reiterate what I was saying earlier. If markets do crash or go into a bear market, this is when animal spirits will return to the market and return to buying mode, because stocks, of course, will look cheap. This is when investment managers will look to make money, and they'll look to buy into those stocks that they like, taking a long-term view. So remember, AI chips, data centers, uranium, lithium, they've all got strong growth tailwinds. And what about Nvidia? Yes, I spoke about Nvidia yesterday. It's the only company of its size and magnitude that has sold out all cloud GPUs, and it's growing gross margins by 70%. You're not going to get that from any other company in the world. And they also said that they've got $500 billion of orders across 2025 and 2026 for AI chips. That's compelling if you are looking for a stock to buy if the markets crash. Changing pace, let's look at stocks to add to your watch list now. Let's start with Walmart shares. Walmart shares did really well overnight, rising almost 7% after releasing better than expected results. They saw an almost 5% gain in sales for the quarter ending October 31. Sales estimates for the fiscal year were revised up to more than 5%. E-commerce sales particularly strong, and this basically completes a mixed quarter for US retailers, with Walmart, Amazon, and TJ Maxx reporting strong sales from consumers focusing on, their basic needs. But we didn't see, really good results from Target and home improvement chains such as Home Depot and Lowe's. Oracle is a barometer for the AI risk trade, and Oracle shares are falling like a stone. They dropped almost 7% overnight. And why are they a barometer for AI risk? Well, many are betting their shares are going to tumble. Their shares are down in a bear market. They're down 24% in the past month. Now, a series of deals have been kind of like at the helm of Oracle of late, with Nvidia, OpenAI, and of course there's concerns about their AI valuation. There's a lot of concerns as well further about Oracle spending too much money, and of course there are liquidity concerns and lending concerns, and credit default swaps for Oracle themselves have actually risen to a 3-year high. Basically, this is suggesting that many believe that the tech giant could be due for a serious pullback. Liontown shares going the other way. Their shares roared up yesterday on the ASX. They rose almost 10% after they completed inaugural digital spot sale of spodumene. And of course, they are a lithium stock that have been doing quite well of late after the lithium price has shown that its bottom is behind us. So well done to those of you that are in LTR. The gain that we saw yesterday in Liontown takes the year-to-date gain for this miner to 206%, with 63% of that coming from the past month. However, analysts are saying that this stock is a little bit too hot to handle and it's an underperform. Plenty to watch and consider. Stay safe. Happy trading.